transformations for the software industry ever. For the first time, service is software. Software is service. And the service industry is 100 times larger than the software industry. And so now for the very first time, you're going to have human agents that are, of course, managed and supported by ServiceNow, augmented with AI agents that are going to be working autonomously, working with humans, and they're all going to need identity management, access control, network control, all of the things that companies do with respect to regulation and compliance and governance. All of that has to be provisioned, whether you're a human or an agent. And in the future, of course, out at the edge, robotic systems. All of these autonomous systems, the time has now finally come. Now, of course, for our industry, for the rest of the 5-layer cake, it's completely revolutionary because agentic AI needs to be processed in real time. Unlike software of the past that's pre-recorded, you can put it in storage, retrieve it as you need it. Today's software needs to be processed completely in real time. The amount of computation necessary from generative AI 2 years ago to now agentic AI, it has gone up 1,000% because the AI now has to read a lot more, use tools, reason, generate a lot of tokens. Not only that, the amount of use has gone up orders of magnitude because now for the first time, AI is doing work. It's doing useful work, and the return on that investment for software companies, for agentic companies like ServiceNow, is completely accretive. And so that time has finally arrived.
Let's get out to John Ford. He is in Las Vegas. Both shares are fractionally lower, John, but with more on what sounds like a very big announcement.
For sure. Kelly, thank you. I am here with Bill McDermott and Jensen Huang. Hey, guys, we're on. We're live.
Yeah.
Bill, thanks for having me once again here at Knowledge. Jensen, always great to see you. Bill, I want to start with just the market temperature. I'm looking at this, and ServiceNow is being priced like Microsoft on earnings, like Oracle on revenue, despite growing 1.5 to 2 times faster than either one of them.
Yeah.
But you made some projections today that maybe are going to catch the street's attention on some of that. Tell me about what gives you the confidence to say you're going to hit 30 billion plus sub revenue by 2030.
When I came in 2019, we were a $3.5 billion company. Now we add a ServiceNow every year. This year we're projecting to be nearly a 16 billion company. Right now we have a 28 billion RPO. So we're growing faster than any other enterprise software company at scale in the world ever happened. We yesterday said to the financial analysts we were going to double the company again, and we would do that by 2030. And the company right now is really focused on a couple of things. One is agentic business. You know, we have to be the agentic front door. We work with great companies like Nvidia, the great Jensen, the great Nvidia. We announced Project Arc. You'll hear about that today. I'm sure Jensen will have some thoughts on it. But we want to manage the identities of the humans and the agents. We treat the agents just like the humans, so the rules and rails can complement this great AI revolution. The enterprise is a pretty messy thing, so we clarify it, we clean the mess up, and we make sure that the AI is secure. And I think that is a big breakthrough, and we told that story yesterday, and people really liked it.
Jensen, tell me about, this is at least the third time that I'm seeing you here at Knowledge. We're talking with an application software company. You've talked about this 5-layer cake with energy, chips, platform, and applications at the top necessary to really make AI work. Why is the application layer not just important, but long-term profitable, do you think? Why does that need to happen, and why is ServiceNow one to watch for you?
This is one of the greatest transformations.
Hey guys, welcome back to my channel. I hope you are doing well today. So without wasting time, let's start our video. The market is focused on the wrong risk for Nvidia. Over the past several weeks, investors has been increasingly concerned about the growing list of risks like higher oil prices, geopolitical tensions, interest rate uncertainty, massive capital raises, profit taking across the technology stocks. And yet, despite all of those headlines, the most important trend in artificial intelligence remains unchanged. There still isn't enough compute. That's the real story. While investors debate valuation and the market sentiment, companies around the world are still desperately searching for AI capacity. The shortage hasn't disappeared. If anything, it may be getting worse. And that's exactly why Nvidia continues to occupy one of the strongest positions in the technology. The market often assumes that once a company becomes dominant, growth naturally begins slowing. But Nvidia's current situation is unusual. Instead of demand normalizing, entirely a new source of demand continues appearing. Cloud providers need more GPUs, enterprises customers need more GPUs, AI startups, government need more GPUs, and now consumers AI applications are beginning to acquire significant inference capacity as well. The demand engine keep expanding. One of the most overlooked development involves Apple's growing AI ecosystem. As Apple's roll out increasingly sophisticated AI features, those services require infrastructure behind the scenes. That infrastructure ultimately depend on massive amount of compute, and increasingly the Nvidia appear positioned to benefit from that trend. What makes this important isn't what's happened this quarter, is that what's happened over the next several years. Every successful AI applications create more user engagement. More engagements create more inferences demand. More inferences demand requires more infrastructure, and more infrastructure drives demand throughout the Nvidia ecosystem. That's why many investors believe the next phase of AI could be actually be larger than the first. The first phase was about building the models. The next phase will be about the serving billions of users. And serving billions of users is far more compute intensive than many people realize. Meanwhile, another important signal emerged from the broader infrastructure market. Companies throughout the AI supply chain continue raising enormous amount of capital. Critics often view this announcement negatively because but think about what they are actually telling us. Businesses don't raise billions of dollars because customers disappear. They raise billions because demand is arriving faster than expected. They need inventory, they need servers, they need networking equipment, they need data centers, or and they need capacity immediately. That's exactly why we are seeing today. Across the industry, executives keep repeating the same message. Demand exceeds the supply, name changes, product changes, customer change, but the conclusion remain identical. There is just simply not enough AI infrastructure available. Even more remarkable is what continue happening with older generation hardware. Historically, technology product lose value as newer generation arrives, but AI is creating a different environment. Older Nvidia systems continue generating strong economics because customers still need every value